This life and death that seems so remote from our present day life, being in a battle with native people and dying in this sort of remote location, it seems very distant from our present day experience. Life insurance, especially in the 19th century when life insurance was kind of an innovation and was even sometimes viewed as, some people disapproved of it because they thought it would prevent people from saving, or it was a little bit speculative, or whatever. It was an innovation and it had to be sold.
Welcome to the Leader's Edge podcast. I'm Zach Ewell, content producer here at Leader's Edge. Soldiers engaging in combat with native tribes in post-Civil War America. The free press waging a war of words on companies in the Wild West. A massive parade celebrating the tricentennial of the colony of Massachusetts. These are all scenes from author Katherine Hempstead's new book, Uncovered, The Story of Insurance in America. The book shares how our insurance industry came to be through the lens of American history. Sprinkled through her book are stories about real people and historical moments that transformed how we have come to know risk. Give this conversation with the author a listen. So, Katherine, you start the first chapter of your book off with a bang, named The Birth of a Business. The chapter opens in post-Civil War America with a man named Lieutenant Frederick Henry Beecher engaging in combat with native tribes on the border of Kansas and Colorado in 1867. You share that hundreds of warriors, armed with rifles, lances, and arrows, engaged in this battle that left many casualties, including that of Lieutenant Beecher, who apparently dragged himself over to a nearby town before dying. Some of his last words were, quote, "I have my death wound, General. I am shot in the side and dying," unquote. Now, that's quite a way to start your book, which again is about the history of insurance in America. What is the tie-in with this real gruesome event and how insurance in America was birthed?
Oh, thanks for asking. That's a great setup for me. Well, I think the contrast that I wanted to sort of draw was how this life and death that seems so remote from our present day life, being in a battle with native people and dying in this sort of remote location, it seems very very distant from our present day experience. But the tie-in is that when the unfortunate lieutenant's family tried to collect on a life insurance policy he had purchased, their claim was denied on a technicality because he had not paid a surcharge for a war risk charge that had been deemed due by the insurance company. And it turned into a huge kind of a brouhaha that involved the insurance press and different friends and family members of Lieutenant Beecher and the insurance company in question. And in some ways, it reflected sort of the state of insurance regulation at the time, which was like relatively loosely regulated. So a lot of issues were kind of worked out in an ad hoc way that involved the press. But in another sense, to me, it seemed like something that could happen today and really resonates with experiences a lot of people have, where they have a claim denied by an insurance company, whether it's correct or not. They don't understand it. It seems arbitrary or capricious. They get angry, they complain. And many times still, people use the press to sort of prosecute charges against insurance companies, whether rightly or wrongly. And I see that all the time in my job at the Robert Wood Johnson Foundation, where I really work on health insurance. And I see those stories come up very frequently and, create a lot of discussion. And it really goes to the heart of the book, which is really tries to focus on what is sort of public and what is private about insurance. How do we figure out as a society sort of what is fair, and how, how should certain issues be, be decided upon. And so when insurance issues get dragged into the public square, and when people feel that insurance companies are making arbitrary decisions that are not in their favor, I feel like there's a real through line from the past to the present.
That's so fascinating. I feel like you can make a whole movie, like a whole Western movie about that. Like the first act is the battle, and then the second act is trying to get the payout.
Yeah, some people might walk out in the middle, but I think I would sit to watch the whole thing because it was a great story.
Well, maybe it's like a courtroom drama or something like that at the end, or like you said, playing it out in the press. So that's very fascinating. So I want to ask about the cover of your book. It looks as though there are people dressed up as pilgrims, and they're protesting or participating in a parade. Which is it?
It's a parade. This, I have to thank the insurance library for sharing this picture with me and letting me use it in my book. It's the title of the picture is called Parade of Insurers, and the occasion is a large parade in Boston to celebrate the tricentennial of the colony of Massachusetts. So it's in the 1930s. You can see a lot of umbrellas out. So it's a rainy day. And I suppose what happened was, all of the different kinds of businesses in Boston participated in the parade and dressed up as pilgrims. And here, the insurance companies are, it's not just insurers, it's also brokers and agencies, I think, are carrying these signs that all say insurance at the top, which makes me think there are probably other industries. Like, this must have been a very big parade, insurance, and then the name of the company under that. And it is, I think it was taken by the Boston Globe, this picture, but I don't think it was actually in the paper. It wasn't published as one of the photographs that was used in coverage of the parade, but they, probably take many more pictures than they use. So I thought it was a great cover for this book.
Switching topics now, as I understand it, your book dives into the crucial role that insurance has played in American politics. Can you expand on that for me? Does that have to do with a specific politician?
I think what it really focuses on is sort of the constant tension that we've had between sort of what is like a business issue and what is kind of a policy issue around insurance. And it really traces the history of the business itself and its interaction with government. And I think that, one of the things that's really interesting about insurance in the US is the fact that it's regulated by the states. And the book kind of goes into, talking about why that came to be and why that's significant, and how, I think it's made it hard to solve certain kinds of problems, especially problems that require public funding, which is usually hard to get at the state level. And then, in the beginning of the book, the federal government's not really very important. The federal government isn't large, and the federal government isn't really very involved or interested in insurance. But around the time of the Depression and the New Deal is kind of an inflection point where we start to see the federal government emerging as a significant provider of insurance with Social Security and the Agricultural Adjustment Act and unemployment insurance, which is done by states, but kind of at federal direction. And then also starts to become more interested in potentially scrutinizing the insurance industry in various ways. And we start to see the different kinds of congressional hearings. So I think it's not so much about politics per se, but it's about the way the insurance industry is interacted with state and federal government over time.
So when it comes to the concept of insurance, America has definitely not been the first nor last country to build up its own industry in this sector. For instance, Lloyd's of London has played an instrumental part in the world of risk. In your opinion, based off your book, what's unique about the American insurance industry?
I think, like, one of the things that's interesting, and I don't know as much as I wish I did about insurance in other countries, but I think one of the things that's kind of an interesting characteristic of insurance in the US is, at least, earlier in the 20th century, there was a really, really big interest on the part of the companies to not have, it's kind of a duality, I guess I could say, where insurers from the outset would say that what they were doing was something that transcended mere commerce, and it was really a kind of like a public kind of or social kind of enterprise, which certainly is not untrue, but that didn't go along with wanting to have any kind of partnership with government or have any kind of government involvement in insurance. And the insurance industry was very sort of grudging about any kind of like public participation in insurance, and were very wary about what they saw as sort of overstep by government. But at the same time as that was going on, and they kind of, I think, successfully kept the US from, adopting some of the sort of national social insurance programs that were, more common in other countries. The industry became quite rigid itself in some ways, especially like the property and casualty industry with the rating bureaus, and very like rigidly defined sort of organizational hierarchies and divisions between, property insurance and casualty insurance. And in some ways, one of the ironic things that people noted around the time that the auto really became important, and there's a chapter on this in the book, that auto created a like sort of a challenge for the insurance industry because it mixed so many different risks. And it does seem sort of silly to think about it now, but at the time, at first, until the mid 20th century, people had, 10 different policies really to protect against all the different kinds of risk, property liability to the damage to the car, damage to something else. And it took the American insurance industry kind of a long time to be flexible enough to create comprehensive auto insurance, because they had kind of built these very sort of rigid structures. Meanwhile, in England, where there was a much bigger public presence in terms of national health insurance and that kind of stuff, the private industry was actually much more sort of flexible. And there was a time when, a lot of auto business was going to Lloyd's and going to British companies, because the US insurance industry sort of had become so kind of governmental itself in some ways, and so bureaucratic that it, had a lot of trouble sort of, getting itself together. So
in your research for this book, you said that property insurance specifically is a hot topic, specifically how the coverage is becoming less affordable due to climate change and natural disasters. How did the insurance market in the past overcome these risks?
That's a great question. And I think one of the things the book sort of goes through in different sort of examples are like different examples of sort of coverage gaps in different lines of business, like different times when there was a real hue and cry about the affordability of insurance, and people sort of tried to make it into a policy problem, with different kind of outcomes. So, I mean, one thing that happened in the, I think the first thing you maybe think of is fire insurance. So like at the very early days, sort of when at least when my book takes off, and fire insurance is older than my book for sure, but like sort of late 19th century, big problem with fire insurance wasn't so much affordability, but like insolvencies, because people didn't really know how to price the risk. They would compete just to get business. Agents, would, had sort of mixed incentives and would, take all kinds of bad risks. And then when there would be a fire, a lot of times it'd be like a conflagration in a city. A lot of things would burn down. A lot of companies would go out of business. So that was a big problem for consumers, not really an affordability problem. Later, there started to be sort of that problem got solved through, better regulation, and also, underwriters started to figure out some more things about how to price risk and develop like the maps and schedule rating and stuff like that. So that problem sort of went away. But then there were, definitely episodes where many consumers felt like fire insurance was completely unaffordable. They would make all these improvements in their town and argue that their rates still didn't go down, and they would get their, improve their water supply or meet these building codes, and et cetera, and sort of all kinds of complaints. And really, the way that finally got solved was through like loss reduction, because people finally, there started to be fewer fires, just to cut to the chase. People started to use different building materials. Fire departments did get better, more things were fireproof, et cetera. And there just was less fire. So actually losses declined. And that was when, the coverage kind of expanded, and we started to have what we think of as like a comprehensive homeowners policy that included, a lot of other things that weren't initially covered, like things like, riots and, all other kinds of things, many things beyond fire. So that was one example where there was kind of a coverage gap. So that's one example. And then there's another good example with auto, where when auto started to really take off and, comprehensive auto policy started to be written in kind of the mid 20th century, there were a lot of accidents and like lots of costly litigation, because for a period of time, car traffic sort of like out roads weren't safe. There weren't like DUI laws. Cars weren't as safe. There was just so much growth in volume and growth in miles traveled, and not the like safety infrastructure to keep accidents down. And there were so many accidents, and premiums were really going up a lot. And we started to see auto insurers doing some of the things that we're talking about today with the with the property insurance problem that we're having, especially in certain parts of the country, where they would not want to sell policies to people maybe who were older, or because juries were so important and so much litigation, they wouldn't want to sell policies to people that they didn't think would like present well in front of a jury. And there were a lot of things that seemed like really kind of unacceptable to consumers. And given that insurance was mandatory for driving, it became like a really serious problem. And so we there were lots of kind of congressional hearings and talk about it. But what really happened, to be honest, was that cars got safer and driving improved, and traffic enforcement stuff improved, highways were built, and losses came down. And I mean, not to say that there aren't still problems with the affordability of auto insurance. And I know in recent years, accidents have gone up again. There's a lot of reckless driving and impaired driving and stuff like that. But that was a problem that sort of, this new technology, the auto, became, disseminated really, really quickly before there was sort of an infrastructure around it. And there were a lot of losses, and the insurance industry reacted to it by, trying to avoid, not surprisingly, trying to avoid risks that they didn't want to take. But then that became a big social problem and a big policy problem. And it certainly put, certain kinds of drivers at a big disadvantage, but, kind of went away to the extent that it, and it was sort of a crisis for a while, like a hard market, and it's gotten better, but it's really because losses went down, and that made things more manageable.
Does your book at all touch upon the history and transformation of insurance brokers throughout American history at all?
It talks about agents, to a certain extent, yeah, and it talks about how like at least a long time ago, and this is probably less true now. And I actually wished I had included more on how that changed over time. But the fire insurance agents had, a lot of independence. They worked for more than one company often, sort of back in the day, and they, could make a lot of decisions on their own. And a lot of times insurers would be very angry at them for taking bad risks, or for like letting, thinking that they had allowed people to, overvalue their property and stuff like that. So there are these interesting sort of conflicts between fire agents and insurance companies. And life insurance much more adopted kind of a perspective of like having these kind of branch offices and having agents that work for the company. And they had this very some of the big companies very organized systems of sort of promotion and rewards for sales. I mean, I think a big difference that I hadn't really thought about until I started working on this was that at the time, and it's probably still a little bit true, fire insurance or property insurance didn't need to be like quote unquote sold as much, because everyone accepted the need for it and wanted to buy it. It was just sort of a matter of being able to afford it. Whereas life insurance, especially in the 19th century, when life insurance was kind of an innovation and was even sometimes viewed as a little bit of a, maybe something that was, some people disapproved of it because they thought it would prevent people from saving, or it was a little bit speculative, or, whatever. It was an innovation and it had to be sold. So there was a like kind of a different vibe among life insurance agents that were really prioritized like their salesmanship, because they had to get people to buy coverage that might not otherwise buy it. Whereas, fire insurance is a little bit different. What they were trying to do was really like assessing the risks sort of on the ground. And so I think that was one of the really, interesting ways that agents sort of came, were covered in the book.
That was my interview with author Katherine Hempstead. I hope you enjoyed it. For more podcasts, go to leadersedge.com.